Welcome to Barchart's weekly series of webinars designed to help you, the investor trader, to better understand a variety of trading concepts, as well as the pages, and particularly today, the tools Barchart provides to help you to make a more informed investment decision. Today's subject is chart tools, their functions and aspects. Just as a master carpenter will tell you that there is the right tool for every job, in charting, there's a proper tool for discovery and assessment in our market analysis. Hello, my name is John Rowland, and I thought today what we would do is do a little bit something different than we've done in the past of our webinars. And what I was going to do is I was going to use a variety of tools that are available to you in our site with current real-time markets to show you how to utilize these tools, but also, how even the most mundane tool can have a greater purpose in our price discovery. Plus, I'm going to give you some hacks, like how to show you how to use a screwdriver as a flange or a hammer as a door jamb, so to speak, since we brought up the carpenter. But with me today is my partner, as usual, and our moderator, Jean Baker. Hello, Jean. How are you today?
I'm good, Jen. How are you? Back from a week off. I hope you're well refreshed.
I am well refreshed. Had a great time in Vermont skiing. I appreciate it. But so last week you had Jim step in to present a discussion on chart of the day.
That's right.
That was what I was amazed me was the depth of experience of his insightfulness and in terms of technical analysis. But Gene, did you know that I started my career as a chart technician for a trading firm many moons ago?
Yes, I think you mentioned that at one point, John.
Well, hopefully today I'll bring some of that expertise, that same that Jim did from last week. So let's jump right into it. Well, first, just remember our disclaimer here is that today is for educational purposes and that, all forms of trading have risk involved in them, and then it's important for you to understand each individual trader should understand their risk, and we recommend that you seek the advice of a qualified financial person before you do any kind of investment or trading decisions. Okay, so where do we start? Well, I'm going to go to my bar chart, and what I need to do is I need to get to a chart, right? And so let's just go to SPY right here. And notice I have charts here. I have an interactive chart and I have a technical chart. So first, if I go to the interactive chart, this is where I'm going to find my tools. Pull this up, and you can see it right up here. It says tools, right? And if I click on that, it shows me the different tools that are available to me as a trader. Now, that's not the only place I can find on an interactive chart. If I go to, let's say, a watch list, any one of our watch lists or any one of our popular pages, if I click on, let's say, the flip charts, right? Notice I do have tools. Again, I can open that up. Or if I blow this out into my dashboard, I will also find the tools. There it is up there as well. Another way I can pull up tools very quickly is anywhere in the field of my chart. If I right click, I can also pull down the drawing tools. So there's a lot of different ways I can find tools, right? But the one place where I can't find tools is on the technical chart. All right, so it's important to remember that you want to be on the interactive chart. And the way I kind of remember it is that if I want to interact with my chart, in other words, put tools on it, I need to be in an interactive chart. Okay, so what are some of the tools that we have and what are we going to look at today? So on the left side, we have some of our more basic tools, and on the right, some of the more advanced concept tools. What I'm going to do is I want to run through most of the basic tools, and hopefully I'll try to leave some time so that we can do a little bit more in depth into the advanced tools. I'm not going to be able to talk about all the advanced ones. I'm going to concentrate on ones I think you guys will find more interesting, or at least ones that I think that have a little bit greater relevance. Fibonacci's, Ganfans, maybe even pitchforks. Okay, so as we go through the tools section, though, I want you guys to realize that there is not only these different tools, especially the advanced ones, but you will start quickly discovering as we work with these tools that there's this balance between the art of charting and the science, right? And the art being the interpretation or the subjectivity of that particular tool, and the science being consistent, or how we set our tool, or how we put it in practice, right? So if I'm going to be using a tool, and one of the ones that really is a great example of this is, and we'll start right here on the top here, is our trend line. And this is a great example of this blend between what we could say is subjective or interpretive, and also where I want to be very precise. So if I click on Trendline tool, here notice that when I bring it into my chart, it gives me this cursor, and all I'm going to do is left click, and then I can draw a trend line. Now, once I drop the line, right, here's this kind of being more of interpretive. I'm just saying, hey, look, this is the kind of general direction of my market. Now, one of the cool things we can do with a trend line or any of our chart tools is I click on the tool itself, and notice that there's these little circles here that come active. Now that means that line is active, and I can move it around whatever way I want. And again, here's more of like an interpretive. I'm just saying, hey, looks like my market is in an uptrend, right? And I can also right click on this. Oop, there we go. And I can change the default settings for it. I can change the color, I can make the size, I can extend it out to infinity. Arrows, the number 1 arrow will be to the left, and the number 2 arrow will be to the right. Also, I can show pricing, percent change, and show how many bars or how many candles in this case would be the length of my trend. Now, the science part of how we draw a trend line is many traders will like to connect recent or lows, right? And again, one of the things we might want to do is make sure that we connect enough lows. I think we need at least 2, maybe 3, to help us define the trend line. And if now I'm going to be using this as a way to define an entry or an exit, this is where I want to be, make sure that I'm consistent with my process. If I'm going to use lows, or I might, for instance, use highs. Here would be a great example of that. Right, here's a trend line I'm going to draw over here. Right, I'm going to connect my highs for a trend line over there. And this would give me an idea where I want to set a stop or set an entry based on a trend line break. But as every time that trend line breaks, then I have to be more consistent with, how I set my trend line, right? I want to make sure I'm using the lows. But a lot of traders will tell you that they like to use not necessarily the origin of the move or the beginning of the move, in this case, this recent pivot low, but where we have a confirmation of the trend. In other words, in this example here, is we were still in a downtrend. We broke out of it. We haven't really established a new uptrend, and we probably need to make a swing high and then a swing low before we would define this as an uptrend. Again, I could do it based on my lows. One of the ways I like to do it is I like to connect as many closes as I can possibly do, and kind of see if I can get this a little nice and tight for you guys here. Right, something like that. Again, I'm more using more of an interpretive, but here, if I'm going to make a decision, if I'm going to say this trend line is broken, I usually wait for price to close below my trend line. So I like lining up as many closes that I can. And again, it is very subjective here at this point. You can see that some of the points are on the line and some of the points are off the line, right? So again, just understanding this blend between subjective and science. Just be consistent if you're using one of these tools as an entry or exit, so that when you go back and you test your ideology, that your tool is consistent. But if you're just using it as a general idea or an interpretation, then you can be a little bit more flexible in how you defined, in this case, a trend line. All right, so what's our next tool? Array. All right, so let's go to a different market. Let's go to gold. I like looking at gold. And what are we going to use array for? So array is going to be used for as like a measuring stick or a ruler, so to speak, right? And so what I've done here is already created a couple for you guys. Here is I've created these rays, and here's my tool, ray. Again, my cursor, I'm going to left click, drag it until I find the point there, let go, and that sets that ray. Again, if I wanted to change the defaults on this, again, you can see here I've set the defaults based on the price, percentage, and count, right? Or I can add arrows or make it go on to affinity, so to speak. And so what I'm going to do with this is, now is I like to use this as kind of like a measuring stick. For me, I can see the length of the average move that gold has had, going back to like September of last year. And you can see that there is a little bit of consistency about gold in this downtrend that we've had, that a number of days, looks like 18, 15, 15 here, I think it is, 20 days, but also the length of the moves. This one's only about 7%, but here's a 10%er, here's a 10%er, here's another 10% move. So what's kind of cool about this is now we are starting to see a cycle of this market, and we have this tool that it can help us extrapolate and maybe make some predictions. And I can come over here and left click on this and drag this line right over, and I'm going to just place it right on top of that last price movement, right? And let me drag this up a little bit for you. And then this could extrapolate or predict where prices could go if this next leg is going to leg down, if this next cycle of price is going to be on the downside. Obviously, it looks like we need to break below this level right here, and it looks like we tried to do it yesterday and we bounced off it today. So again, it doesn't mean that we're going to go down there. I'm just saying that where we could measure that length. Now, one of the things that I like to do when I do these kind of measurements is when I extrapolate into the future, or an area where I believe that there is a price movement. Now, remember, we said it was about 10%. So let's change that. There we go. Let's change that to about 10.5% right there. One of the next tools I can use is a horizontal line, and that's what this is here. And what we're going to use with the horizontal line is it was going to help us to find areas of targets or areas where we think there might be support or resistance. And what I usually like to do is look at these areas in the higher time frames. So I go to a higher time frame, right, and notice that our extrapolation of our price, let me drag this up a little bit for you, is right where back in March, after the market had the collapse during the COVID crisis, this is right where gold started to rally again. So what we're seeing here in the 1 year cycle, in the cycle of gold, this downtrend has been in control, is we're getting very close to the origin of where gold rallied from last year. And that could be significant in terms of our deciding of finding a trading opportunity. But let's go to our watch list. And again, I like to show you guys different aspects of our charts. So here I am in Chevron. But again, one of the cool things we can do is we can blow the chart up so it's nice and big for us to see. And again, what I said is, a horizontal line is not really an exciting tool, but it can be a very interesting tool in terms of helping us to find areas of supply or areas of resistance or support. So for instance, here I'm in a 3-year chart. This is a weekly chart. Again, I kind of like to use these tools in these higher time frames. And I'm going to go to my horizontal line, and I'm going to just draw lines where I believe I'm going to find some potential resistance as my price comes back up. Now, one of the things we can do is we can right-click on any line or any tool, and we can clone that tool, right? And what I like to do is I like to have at least 3 tools at all times, 3 lines at all times on my chart, and I continually move them as my market moves around. Now let's go back to our 6-month time frame. You can see as that market was rallying, this would be an area where I would just say, hey, this is where I'm going to be thinking about maybe taking some profit, or maybe I might be using to tighten my my stops, or this would be my secondary target. Again, what I did say is I like to use 3 lines, and normally what I do is I usually keep 2 lines in the range of price action in terms of my trend targeted, and then I might set my 3rd line where I find, in this case, where I might think that there is some support. So now what I've done is I've kind of defined the range of price for my market. My options traders should be thinking about this kind of aspect in terms of maybe setting some spread type trades, right? So there again, here is where we're doing more of interpretive. Now, if I go down to a lower time frame, right, now this is where I can be scientific, right? I can look for the very significant lows or the gap that the market leaves, or if we go back to our support here, see that there was a gap here. So now I'm going to say, hey, maybe I'm going to raise my line just a little bit, right? Here's where we're being more scientific at a lower time frame, and at the higher time frame, we're being more kind of interpretive or subjective, right? So that's horizontal lines. All right, so what's our next tool? Well, our next tool is a vertical line. Now, vertical lines, again, another one of those ones that is not what I consider glamorous in terms of how I can use it. But one of the cool things about vertical lines is they're a way to discover patterns or time patterns to a market, or cycles to a market based on time. A vertical line is going to give you where you draw the line, it's going to intersect down here on our x-axis, which is going to tell us the time of day. Now, again, it depends on the different markets, but if I draw a vertical line, and one of the things that I kind of like to do is I like to draw vertical lines where I see, big price changes, or I find significant highs. So here's a significant high and a price change, and notice that came around 11 o'clock. You notice that we had an explosive movement around 10 o'clock. And if I go through, over multiple days, I start seeing this process. Now, this is a hack, I will admit to that, right? A 1-hour candle. Here I'm in a 1-month chart, 1-hour candle. What happens inside of the 1 hour between 9 o'clock and 10 o'clock when the 10 o'clock candle is being created? Well, that's the opening. And there is, very significant probability to all markets that in that first hour, or the first 2 or 3 hours of trading of the morning session, that you're going to see either a high or a low, or a reinforcement of the trend that has been continuing. So there's nothing unusual here that you guys should. But again, for my day traders, this is a really good way. You might find a cycle of time of day where you might see a reoccurrence of price action, or reinforcement of your trend, let's say like 1 o'clock or 2 o'clock. I remember a time on the floor where I had a customer who said, sell me 200 crude contracts from the opening until 11 o'clock, get 200 every 15 minutes, and then stop, and then redo that again from 1 o'clock until 2:30. So you might start seeing some of these kind of patterns in your markets. For my Forex folks, you're going to start recognizing time of day in terms of European times, 3 or 4 o'clock in the morning, and that could set how you set your entries, your targets based on time of day. So the vertical line is really nice in terms of helping us to find cycles in terms of time of day. All right, so let's go to our next tool, which is our trend channel. All right, and let's change this. And this one is kind of cool. I set this one up earlier in the week. I was looking at this one. And one of the things, let's go back to we're 60 minutes here. Let's see, let's go to a yearly chart. Is that what I want? No, I want a 1 month chart. Yep, there we go. All right, so we're in a 1 month chart here. We are going to do our trend channel. Now notice here when we're looking at our tools, we have 3 little dots here. In this case, here we have only a 1. Here we only have 1. This is how we're going to set our tool. Well, we start from left to right. So we'll go left, up, right, down. Okay. So I'm going to set this like here. I'm going to say, here is my significant high. I'm going to set another high, again, my trend. I could actually continue this down if I wanted to. And then when I release it, it's going to continue that trend line, but now I'm going to grab it. Whoops, let me try that again. I'm going to grab it, and then what I'm going to look for is a significant swing low, in this case, to help define my channel, and then drop it. So now what I see is here's a down channel that has been in control, and where do I think that, price could break out of that channel? Let's do that one again. So I could do it like this. Here we have an uptrend here. Oop, I can grab my line. Some days it works. There we go. There's my trend channel. Okay, bring this in back here. And then I'm going to set my significant high here, something like that. There we go. Okay, like that. And now what we see is, in this example of Walgreens, is we were in this down channel, and now we've broken out of it, and we've broken out of it quite significantly on this uptrend. So this would be an opportunity to say, hey, this might be the beginning of a new uptrend cycle, right? And if we look at a higher time frame, we are in a much larger, higher time frame uptrend. And so what we're really just seeing here is, looks like a corrective phase, and now a continuation of our uptrend. All right. All right, our next tool is our ellipse. I'm going to pass over the Gann line. We'll revisit Gann lines when we come to the Gann fans. I just want to make sure I get to all the tools here. Ellipse. So ellipse is a really cool way to help us to shadow an area of where we're going to do some kind of price discovery. And again, usually what we'll do is on an ellipse, we'll probably be looking at a higher time frame and then narrowing it down to a lower time frame. So we're going to shadow an area, and then when we go to look into that area, we'll be able to find it. Because what will happen is, a lot of times, is when we change time frames on our charts, we lose perspective of an area that we want to look for, or we might have to drag really far until we can find that area, and we might lose that perspective. So what an ellipse does is it helps us identify a particular area that we want to focus on, and then when I go to a lower time frame, then I can be a lot more aware of where that is. So what I saw here on Verizon, which was kind of cool. I saw these 3 candles right here, kind of look like candles on a birthday cake. And so I just want to, create an ellipse so that I can go into a lower time frame and find this area. And again, remember I said you could click on your tool and you can clone it. And so I'm going to just kind of clone this one more time. All right. And now I'm in a 6-month daily chart, and let's go down to a 1-month 60-minute chart. And now I'm going to slide that over. And there's that first candle. If I drag this down a little bit, right, and drag this over, there's that second candle, right? Again, here's where we can get that science, right? Here's my line here, and I've set it right on the closing price. If I clone this line again, and I could set it, on this closing price here, this might be a way for me to look for, a gap fill, or what is going on here. What it looks like here is that Verizon had multiple days where it had a little bit of an uptrend during the day, and then boom, the next day it had a big gap down. So then when I go back to my higher time frame, now I'm going to say, hey, maybe there's something here. Maybe price is going to come back and fill that gap. Or now this could be an area between these 2 candles. This could be an area of resistance, or an area where my trend could be pausing. So I've gone from a higher time frame, looking for a potential area, and then I've gone to the lower time frame to investigate that area to find the precise values of where I want to look for potential entries, or setting some different targets. Okay. All right, so let's see, let's go to our next market. And our next tool is our rectangles. Again, this is a tool that is great for shadowing in particular areas. And normally what I like to do on these is I want to shadow areas where I, again, feel that I'm going to find support or resistance. And also I want to start in a much higher time frame. So here I am in 3M. I'm on a daily 6-month chart. Let's go out to a 3-year chart, right? And what I see here is, a nice uptrending market in 3M. And where is the next area where I feel that there could be some resistance, or where I think that price could slow down? Right now, I don't really see much here until we get way up here, right? So this might take a while for us to get up to this value. But again, I'm just going to use my rectangle to kind of just define this area. And I'm going to pull it all the way over, to current time. There we go, all right? And again, let's go back to our 6-month chart. And again, that zone is not even on my chart right here. But if I, scroll this down a little bit, and there is that range of price. Again, I might use a triangle, or excuse me, a rectangle to define an area of support. And I feel that this is probably looking like a good area of support. Again, this is at my lower time frame, but still, a nice area of support. Again, for my options traders, this would be an ideal option type scenario, right? I mean, I would be thinking the 180, 210 vertical spread right here, right? This would be a great opportunity to look at. So now what I've kind of defined is a range of price where I believe that prices might be getting relatively expensive in terms of this price movement, or where I feel that there's support, and at the lower end might be an opportunity to re-engage my trend or get back into buying this particular asset, right? So try rectangles, again, another boring kind of chart tool, but one that can be very productive and for us when we start to look for support and resistance, and helping us define ranges of price, all right? Okay, our next tool is text. And text is, again, one of these kind of tools that is not really going to help us in finding price discovery or help us in our assessment. But what I would encourage you to do, so I know that some of you already do this, but some of you that don't do this, I would advise you that you do this, and that is to have a logbook of trades, right? So here what we're going to do is we're going to use text to enhance, to detail our trades so that when we go back in time and we look at a particular trade, we can reconnect or discover again what are the variables that I use to take that trade, and not only the setup but also the results. So this was a trade that we set up in our futures risk management webinar. It was based on the 918 crossover. We got the crossover at this point, right? And where was our entry? It was right in, I think it was right here on this candle here. And then we talked about one of the risk managements that I use, where as I get closer to my targets, I will use something called a 3-candle count back, and when price breaks above that 3 candles, that's where I'm going to set my stop. If we waited for the crossover, right, when the signal that we used to enter the market gave us a crossover, notice that our exit would have been way up here. So this was a technique that allowed us to save money on a trade that we had a nice profit in. And then here is the result of that trade. So how did I get the result of that trade? Again, in tools, we have something called a calculator, and we can calculate profit and loss. I'm not going to go too deep into this one here, but you just basically set your entry and your exit, and you can put in how many contracts you had, and it'll calculate that for you. And that's what it did here. On a 1-lot contract, our entry was 1284. We got out at 1204, and we made $896 on this particular trade. All right, so text is really kind of a way to help me with my logbook, help me to be creative with. There's a lot of cool things you can do with your text. You can change colors, put in as much detail as you can into your trades. All right. Okay, so let's get into more of the. Let's go back to our watch list, and we're going to go, actually, let's go to this page here. And let's change this, because our next tool is we're on this side here, and we're on our Fibonacci retracements. So let's talk about that for a second, all right? Now, Fibonacci's can be used as to indicate support and resistance, right? It is in a likely occurrence based on these percentage ratios from Fibonacci math, something called the golden ratio. Now I'm going to show you what those ratios are in a second, right? So what we're going to use is Fibonacci's to help us find potential areas of support or resistance, right? Now, the world of Fibonacci, in terms of traders, currency traders really believe in Fibonacci's. They rely on them a lot, and there's a lot of accuracy when we talk about Fibonacci's and currency trading, and certainly when it comes to price discovery, right? And I think that comes from a basic understanding that, those of you who are aware of how advanced markets are right now, we have something called algorithmic trading programs or quantitative trading programs, and they're very complex software programs, a lot of material in there, a lot of code in there, and that a lot of these, I can say with a great degree of confidence, a lot of these algorithms, inside of their code, there's a little piece, and that little piece is Fibonacci. It's kind of their DNA, right? So there's a lot of algorithms that part of their DNA is Fibonacci's, right? So we'll look at examples in another market in a second here. So this is the dollar index. This is a composite of currencies. And this was a trade that we set up in our Forex webinar. And what we was showing here was, this was an inverted head and shoulders. Here was our neckline. This blue line represented our neckline. And then we said that if we could get back above this blue line that we were going to set a target here and here. Now we set these targets based on a little bit based on the structure of this downtrend, but when we use our Fibonacci tool, our retracement tool, the dollar had been in a deep downtrend, right? Left click on the beginning of the move and then drop it at the end of my move. And there you can see our ratios here. We have 23.6, 38.2. 50% is in here. Now, 50% is not a Fibonacci number. It's kind of a self-fulfilling prophecy. A lot of traders like that 50% retracement, so it's available to us, but it's not a Fibonacci number. There's our 61.8. That's that golden ratio, and so on and so on. And notice now that our targets on structure-wise do line up with our Fibonacci's, and that's what we're going to use Fibonacci's for. We're going to say, hey, where's an area that I believe there's some support or resistance, and is this retracement going to fall on one of these Fibonacci numbers? Now, a lot of times what will happen is you can see here, it's kind of obvious, is that a lot of times it becomes an area of resistance, but then when price gets above it or below it, it also becomes an area of support. And so you can see that how this kind of played out in the dollar index, all right? So we did say its currencies are very popular with these. So, whoops, there we go. Let me show you the Australian dollar, Japanese yen. And again, this was another one that we looked at in our Forex. And this was a uptrending market, a really strong market, one of the strongest currency pairs that we've had over the last year. And so again, I'm going to just use my Fibonacci retracement tool. Here's the origin of our move. Here's my first real peak high, right? And then there is that 23.6 retracement, right? And look, notice how this literally stopped right on top of that retracement value, okay? So you'll see in currencies, the fibs work relatively accurately, and it's amazing how a lot of times it'll literally go right to the number, the fib number. For instance, here it's saying 82.14. Again, here's where we need to be. If we want to know precise, we got to make sure that we set our values right on top of our numbers. Here I've kind of just drawn them in a certain area. Again, that subjectivity, right? Which brings us to our next tool, which is our Fibonacci extension. And what we're going to do here is we're going to use Fibonacci extensions to help us define that next move, right? We're going to apply it to a trending market, and this will help us set targets and also profits areas for that next extended move that could come following that pullback, right? So that we're going to wait for a move, we're going to wait for the pullback, and then we're going to predict based using our extensions. So what I see here is we see this big move up here. And again, here was where we kind of pulled back. All right. Oh, hang on. Let's do this. Sorry. I'm going to do this. Fibonacci extension. Here's our move from our last recent low. There is our next recent high. Then I'm going to pull it back on the retracement down here, right there, and then set that a trade, set that tool. And what this is kind of showing us here is what values of how far this next leg could be in relationship to the previous leg. So 100% of this move from here would give us this value. Now notice that, let me pull this down just a little bit here. We have this one that's 127, and we also have one up here that's 161.8. And I like those two as setting my targets. Now notice that I do have one of my old friends, my old horizontal lines here. So let's go back and let me just double check what time frame. I think 3 years I want to go out. Yeah. And notice that this is right in that area where I'm anticipating a potential top or resistance to this price movement. And so that's what we kind of want to look for, is when we start seeing values that are coming from two different indicators or two different tools, right? That's important for us. And here we see an area of resistance based on a chart formation, and it also happens to fall directly right on one of our Fibonacci extensions. So on this move, if we got above 61.8 or 76.6 or even 100, then my target would be definitely here. And I would not be looking for it to go much higher in the short term, and that might be an opportunity for me to take a little profit on that particular trade, okay? All right, so that's Fibonacci extension. I said that Fibonacci's work really well with currencies, and said it kind of came out of the currency world. But let's go back to an equities market, and I'm going to show you how this same process can work. So here I'm in the S&P futures contract. There's our old trend line that we drew in the beginning of our, let's go to a higher time frame. Let's go to a 3-year time frame, right? And here's a nice move, right? Here's that beginning of this move here, big price movement, and then here's where we got that kind of that retracement. So let's draw that tool. Go back to our Fibonacci extension. Here's our peak high. Here's our retracement, right? And then we've set that line. Now let's go to a smaller time frame, right? And let's do it again. Here is our continuation of our trend. Here's our retracement, right? And then let's change the color on this one so we can see the distinction here. Let's change this to blue. And notice that 100% of this move would put us right here, but it's also one of our Fibonacci's extensions from the greater time frame again. So this would give me more onus to saying, hey, if I got up into this region, this would probably be a greater area of resistance in the short term. And I think above here, we actually have another value that's a little bit higher, yeah. So that was a good way how we can use a combinations of Fibonacci's at different time frames to see if we can find those that converge, or what we call confluence, in terms of areas where we see the same price values. All right, so I see a couple questions that have popped up. So yeah, we're talking about Fibonacci's extensions and fans, okay. Also, could you draw and explain a Gann fan? We're going to do that next. And Enrique says, could you please explain how the golden ratio is used? Yeah, Enrique, I don't have time to go into the whole golden ratio. This is the recurring values of ratios that occur in nature. You know, I would just suggest that you Google it, right? There's a lot of great information out there, but those ratios are not only occur in our markets or in mathematical formulas, but they're also very prevalent in nature. Like the example they always give you is the Nautilus shell. So hopefully that helps a little bit.
Yeah, John, if I could, there's been recurring questions that have been coming up, and I want to make sure that everybody understands this. One of them is if you change, for instance, the line thickness on a horizontal line or a trend channel, or if you change the color, do we somehow remember that? And the answer is yes. If you are logged into your Barchart account, Any kind of change that you make to a tool, whether it's color, whether it's line thickness, anything like that, the next time you apply the same tool to another chart, you're going to see that same setting, the same color, the same line thickness. The other recurring question I'm getting here is, okay, so you place a tool on the chart, then how do you save the chart? Well, when you are logged into your Barchart account, anytime you place a tool on a chart, we save it. So next time you come back to that chart, it's there for you again. So there's it's kind of like an automatic process. We will save things until you tell the chart to clear the tools off the chart. Those tools, as John is demonstrating right there, those tools are still going to be there for the next time you come back. Okay, back to you, John.
Okay, cool. Yeah, so again, so as Jean's saying that, once you draw something on there, it will stay there. And which is actually is a good point too, is if you start doing a lot of drawings on things and you want to get rid of something too, is up here you have a clear button and you have opportunity to clear studies, tools, or to clear all. And then if you clear that, then all those tools or all those things that you drew will be gone and won't be there the next time you came back. So anything that you draw will stay, but also here's a way where you can clear those tools and now they're all gone. So you'd have to start over again.
Right, and again, one more clarification on that. It doesn't matter if you have a free account with us or a Barchart Premier account. As long as you are logged in, we save those tools that you place on the chart. Okay?
Excellent. All right, so the next tool we have in our arsenal, we have a couple other ones here, is we have Fibonacci arcs, fans, and resistance arcs and fans, and these are very, very subjective. I don't want to go on a lot of time. I'm running out of time as is. So I'm going to skip over these ones. I would say maybe we might have a Tools 2.0 webinar in the future, but they're basically all kind of the same idea in this one. And when we go to the Gantt fans, you'll see what I'm kind of saying. Next one is time zone. This one, what we're going to do is it's kind of a way to help us to find cycles in markets. It kind of gives us a greater confidence in terms of when I see changes in trends or when I see a major high or low or a swing high or low in my markets. So what we're going to do is we're going to look for a major significant swing low or swing high, an origin of a movement or a change of a movement, dramatic change in movement, and I'm just going to drop the line. And what we're going to concentrate on is we're not going to really pay too much attention to the 3rd, 5th, and 8th line. We're going to look at that 13th line and then out to the 21st line. Now, first is here I have a 6-month chart, which is a daily chart. So what we're looking to look at is on the 13th day, what we're going to see is that sometimes what we'll see is a change in direction, a change in your market, but a lot of times what you'll see is something called trend fatigue, and that's what we're seeing on this example here. Is our trend is in control, but on the 13th day, it paused, and it looks like it made a nice doji. But again, this is another one of those tools that I think has greater accuracy and confidence the higher the time frame we go. If I go to a 3-year chart, which is a weekly chart, right? Again, I picked a very significant weekly low, right? There it is right there. And you can see that on the 13th week, right, that was kind of an extension, again, of our trend. It doesn't necessarily mean it's going to change direction. Could be an acceleration. But on the 21st day, look at it, 21st week, look what happened here. So we did get that reversal in that trend. And if you think about it on a weekly basis, 13 weeks is really about a quarter, right? There's 4 weeks in a month, 3 months makes up a quarter, so 13 weeks, it's kind of right in that area. So there's a lot of correlation between quarterly and 6 months. For this is definitely a good one for you equity traders. For commodity traders, you'll recognize that like on that 13th day in a month, very typical is around the time when we start seeing rollovers and things like that. So it does help a lot in terms. Now, this is not one of those tools I'm going to use as a standalone. I'm going to use this in conjunction with other tools. But if I see a market making a swing high or it's making a swing low, and then I use this time Fibonacci, and that just kind of enhances what I've already discovered, right? Again, that subjectivity of a starting point, different time frames for that. All right. Okay, so what's our next tool? Oh, our GAN fan. So here you go. Who's that? Enrique wanted that? No, Matesh wanted that one. Okay, so let me go to a different market for this one. And let me blow this one out so we can really see it. All right, so GAN fans. All right, the principle behind GAN fans is based in that a belief that markets are geometric or have these cycles, are cyclical. And the GAN fan consists of what are called GAN angles, right? Or sometimes referred to as degrees of regress, right? And what they're going to show us is potential areas of support or resistance, but also to help us protect potential trend changes. Now, Gann, the creator of GAN fans, I think it's Andrew Gann, don't hold me to that, believed that the 45-degree angle was the most important, and that was usually the center line in GAN lines. And then the arcings or the spreading of the different GAN lines would tell us if we'd had a strong trend or a trend that is gaining strength or a trend that is weakening. So let's pretend this is our 45-degree angle line, and you can see that here our trend is strengthening, right? It's on these stronger trend angles, but then when price broke below it, below this line, it fell to this GAN line, right? And then it held that line for a while. When price broke down here, right, then it's going to fall to a next area of support. So GAN fan lines, it kind of gives you like a feeling of strength and direction of your trends, but also can warn you that when you cross over either after an acceleration of price or a falling of price, where you could look for potential areas of support. Again, here where we fell to get back above this angle, well, what did it do? It drifted sideways until it found that 45-degree center line, all right? So GAN lines work really well, GAN fans work really well in conjunction with our Fibonacci retracements and extensions. And again, we want to look for these areas of clusters or these confluences where we see them all come together. So let me leave this one right here for now. And so our next tool is our pitchfork, which is kind of the same as the GAN fans, but it's going to give us channels instead of these angles that we see here. So again, pitchfork, we have 3 dots here. So we're going to go 1, 2, 3. All right. And what we're going to do on a pitchfork is we're going to start from the move. We're going to drop at the first pivot. And then we're going to drop at the next swing pivot, okay? And that is how we draw a pitchfork. Again, we're going to start from a move. We're going to pick a swing high or swing low, and then the opposing swing low or a swing high, all right? And again, here it kind of gives us this interpretation of the strength of our trend and the angle of our trend, the angle of inclination, right? The higher the angle of inclination would be, the stronger the trend. Now, in this case here, we got a popped above our channel here, which is a bullish signal. But now what do we see? We see price has flipped back inside of our channel. So there's probably a higher probability that price is going to continue inside of this channel as long as this trend is controlled. If it gets back above here, then we could continue to go higher at a greater rate of inclination. All right. So there is our Gantt fans and our Gantt lines. But let's go to, we said that these work really well, with our retracements, right, and our extensions. So here's my fib extension. So I'm going to start from the same spot here. Here is my movement. Here's my retracement, right? And now you can see how we have like these quadrants, these little trapezoids, so to speak, or what are they? Not trapezoids. What do they call those? Equilibrium candles or something? Equilaterals. The geometry. That was a long time ago, Gene. But so here we are in here. This trend is going to continue. Then you can kind of imagine that we should stay inside of this box. We should travel along this line. But notice, where did it fail? Where did it didn't reach? It didn't get to our Fibonacci number. Where could this go if this trend is in control, right? By 100 of this move, right, would be up here. But look what we have way up here. Our old friend, the horizontal line. Now, I'm not saying that this is where IBM is going to go, but here's that line that I drew based on a 3-year weekly where price significantly fell back in the March of last year, and that could be our target. So now I have kind of a game plan here. If I believe that this market is going to go higher, I wanted to follow in these channels. I wanted to test and break these Fibonacci's, but where would I look to take profit? If I was long IBM, and to full disclosure, I am long IBM, and this is where I'm picking my target, somewhere around this 149.75, 80 to 150 area. That's what I'm hoping for over the next. And again, now you can see that you also get a little bit of a timing here too, right? So I know that if this trend is in control and I want to see this angle continue, that I should get close to my target sometime about early to mid-June. All right. So again, this is kind of cool how we can use these Gantt lines, these pitchforks with our Fibonacci's, not only to give us targets, but also to give us some timing in terms of our targets. Okay. All right. So let's see, where are we at? Oh, right on target, Gene, right? I said it was around 155.
That's right.
Any other questions, folks, out there before we jump away?
Yeah, I just do want to tell everybody that you will get a link to the recording via your email later on this afternoon. And as with all of our other webinars, we do place these recordings on our webinar archive page. And John, if you can show people where that's at, it's in the tools menu, free webinars. All of our webinars are there, so you can go back and listen to those at any time. And one other question somebody's asking, are these tools for Premier members only? As I mentioned before, no, they are not. And as long as you are logged into a Barchart account, could be a free account, could be your Premier account, we will remember the tools that you place on your charts, and they will be there for you the next time you come back to look at them. Okay, John, you want to talk about next week?
Yeah, next week we're going to talk about watch lists and how they can help you with your daily trading plan. We're going to talk about the different ways that we can use, not only as a collection of markets we're going to watch, but also how to filter on them, how to screen on them, and how to use some of the tools and scanners and custom views to help find very specific information or signals that we want to give us opportunities to take trades or to look for exits. So I'm looking forward to doing that one next week.
Watch lists are probably the most popular tool feature that we have on the website. So many of our users build watch lists, and next week John is really going to show you how you can best use that tool to your advantage. So reserve your spot today.
Yeah, exactly. Yeah, so again, folks, if you have any questions or you want to know about a specific tool, again, I want to really encourage you to reach out to our support staff. These folks are really, you know, Patrick and Isaac and those guys, they want to hear from you guys. So down here, you can go to Contact Barchart. If you have any questions on a particular tool or you about just general information about your account, or what's the difference between just a regular account or a premier account, or how to set the default settings up inside of your account, you know, reach out to those folks. They'll help you. They're there to make you guys successful. They want you guys to be successful. Would you agree with me on that one, Jean?
Absolutely. They're a wonderful bunch of people. I encourage you to use our support group.
Okay, so where are we at? Oh, right on time, right on top of 2 o'clock. Okay, so listen, folks, thanks so much for taking time off your busy day to be with us today. And I want to wish everyone be safe, the best of health, and the good of all trading.
Thank you, everybody, and hope to see you next week. Bye.